Good evening, everyone. Welcome to the Maha Marathon of BFM. Hi, welcome to the Maha Marathon. Everyone join fast. All of you join fast. I'll wait for 1 minute. Welcome to the Maha Marathon. Okay, audio video okay? Everyone? Audio video okay? All of you? Chalo, let's start. So everyone, kindly like the video, subscribe to the channel, click on the bell icon. Okay, everyone do this first. Okay, so today we'll be covering many important numericals as well as case studies also. Okay, many case studies. We'll start with the case study only. Let's see. Okay, so let's start. First one. Numerical on crystallization of overdue export bill. Hi, good evening. Good evening. So, numerical on crystallization, crystallization of overdue export bill. Now, one thing about crystallization, all of you who are there in the classes, paid classes, I told you one thing. The crystallization is done at what rate? Can anyone tell me? All of you who are there in the paid classes, you'll know this. Crystallization is done at what rate? It is, anyone? Crystallization of bills is done at what rate? So, let's move ahead. In the meantime, you answer. Okay? Yes? An exporter had an export bill of USD 10,000 discounted by the bank. The due date for realization has passed and the bill is now overdue. Okay? INR interest is 7.5%. Penal interest is 9.5%. Due date is 15th July. Date of crystallization 5th of August. Original bill buying rate USD 1 equals to INR 80 on 1st July 2025. TT selling rate on 5th August is USD 1 equals to INR 82. The exporter will be liable to pay what amount? Now let me see how many of you first, have you answered that question? Have you answered the question? Everyone like the video, subscribe to the channel, click on the bell icon. Have you answered the question? It is, at what rate is it crystallized? So the crystallization rate is, say this over here. Okay, this one. TT selling rate or original contracted bill buying rate, whichever is higher. Okay, whichever is higher. Remember this? We did this in the numericals also. Whichever is higher. Got it, everyone? Clear? Higher value of buying rate versus the contracted. Very good. Very good. Yeah. So now what will we do in this case? What will we do? See, what is crystallization basically? What do you mean by this? Crystallization means there are two types of crystallizations. One is in Forex. One is in Forex. And second one is in LCs and bank guarantees. Whenever you convert the Forex liability of any bill to INR, okay, to INR, that is called as crystallization in Forex. And in LC and bank guarantee, whenever the LC or bank guarantee comes for payment, okay, that is known as crystallization for payment, and the buyer does not have the money. At that time, it's called as crystallization. So here we'll be following the Forex crystallization. So what will we be doing? Firstly, we'll be doing is, firstly discounted. So we have financed. We are converting Forex to rupees. So what is the rate to be followed? Higher of original bill buying rate or TT selling rate on the crystallization date. So higher of these. So we will be following the higher of these two rates. So what is the rate then? What is the original bill buying rate? USD 1 INR equals to INR 80. And TT selling is USD 1 equals to INR 82. So you will be following now INR 82, isn't it? You will be following now INR 82, right? Correct. Correct. Venkatesh, very good. So now you will be following what? INR 82. So this is the rate you will be following now, INR 82. One thing is clear, which rate? This is the most important and most crucial problem in crystallization. If you understand the rate properly, everything else is very simple. Very simple. You must first understand the rate very properly, very properly. Higher of original bill buying rate or TT selling rate on the crystallization date, whichever is higher. Okay, clear? Tomorrow means in the paper, you will see almost 2 to 3 questions on crystallization, compulsory. Okay? So, say this, what is the case actually? On 1st July, what was it? Say this, due date was 15th July, date of crystallization was 5th August. Okay? So now, look at this. 15th July was the due date, and when did we crystallize? We crystallized it on 5th of August, this date. Okay? So we are assuming, let's say the bill was financed on 1st July. We don't know. We don't know at what date was it financed. Is it given somewhere? In the numerical, I don't think so it's given. No. 1st August, no, nothing. Okay? It's not given. So, this now, let's assume it was financed on 1st July. So, it was due on 15th of July. So, this is your normal rate. See, what is the normal rate? What is given? Look at it over here. INR interest is 7.5% and penal interest is 9.5. So, for normal bill up to year, you will charge him, let's say 7.5%. Okay? And for penal remaining days, you will charge him 9.5%. So now how much will the exporter pay? Exporter will pay now the principal amount plus the interest, normal interest plus penal interest. All the three he'll have to pay. So principal plus normal interest plus penal interest. So let's calculate one by one. What is the principal? Principal is what? 10,000 USD. Okay? Into, what is it now? Rate. Rate is what? 82. Correct? So 10,000 into 82. So 82,000 rupees is the principal. Right? Everyone getting this? Check it, everyone. Check it properly. Okay? 82,000 is the principal. Got it? Next is what? Normal interest. So normal interest is what? 82,000 into 7.5 upon 100 into 15 upon 365. Now this, check this. In the problem in exam, they will definitely give you somewhere when it was financed. Okay, 15 days, something like this, nothing. No, they will definitely give, 1st July is mentioned. Yeah, see this, 1st July it's mentioned. That's what I was thinking. How can it happen that the bill buying date was not given? Okay, so it is given as 1st July. That's why. I also thought in the problem, how can we design the problem without the financing date? So, date you have got now, 1st July to 15th July, it will be a normal rate of interest. So, what is the normal rate of interest? 82,000 into 7.5, okay, 7.5 upon 100 into 15 upon 365. So, that comes out to, everyone do this, try it yourself. All of you, try it yourself. What are you getting? 82,000 into 7.5% into 15 days. Check it. What are you getting? What is the answer you are getting? Are you getting it 253? Check this. Are you getting it 253? Type yes in the comment section. Type yes if you have got it 253. Everyone, if you have got it 253, type yes, because see, the exam is just 2 days now. You have to think yourself. Okay, you have to think yourself and you have to work on it. Okay? You have to work on it. Clear? Correct? So, 253 is the answer. You got it? Yeah. Now, next, penal interest. Penal interest, how much the customer will be paying? He will be paying for these remaining days. Means which was this, on this date it was due, but he did not get the payment. So, penal interest will be charged for these remaining 21 days. So, now 21 days, calculated. 82,000 into 9.5 upon 100 into 21 upon 365. Okay? 82,000 into 9.5 upon 100 into 21 upon 365. So now you must get this answer 448. Check it. Penal interest. Are you getting 448? Check it yourself. All of you will check it yourself. You will try it yourself. These answers given are only for reference. You have to do it. See, you have to clear the paper in single attempt. You have to clear the paper in single attempt. Okay? Correct. Is it so? Yeah. One second. This multiplication is what? 10,000, na? 82 into 10,000. So it will be 8,20,000. See the calculations. See, anyone can go wrong over here. Good that you pointed out. So 8,20,000. Here also 8,20,000. 10,000, na? Dollar 10,000. What is the bill amount? 10,000. Correct. So what we'll do, instead of changing that, what we'll do is, we'll change the bill amount. Okay, we'll make this as only 1,000. Okay, now it's okay. We'll make this bill amount as only 1,000. Otherwise, see, the figure completely changes. This will be only 1,000. Okay, so 1,000 into 82. Correct. Who pointed this out? Somebody who this, yeah, Sharad Kishore. See, Sharad pointed out very correctly that it should be 82, not 82,000, it should be 8,20,000. So what we'll do, we'll change the bill amount only. Okay, so let's make it, because let's make this 1,000. So now it's easy, now it's same. Okay, so all of you got this penal interest 448. Got it? All of you got it? 448. So now, any charges, see, normally there are charges also, but here charges are not given. So 82,000 plus 253 plus 448. Add them, you will get it 82,701. You will get it as 82,701. Got it, everyone? This much will be the crystallization amount the customer will be paying. Correct? This much will be the crystallization amount the customer will be paying. Everyone like the video? All of you like the video, subscribe to the channel. All of you like the video, subscribe to the channel. All of you like the video, subscribe to the channel. Okay, like the video, subscribe to the channel. Everyone click, do it fast. Got it? So shall we move on now? Look at this question. Which of the following statement is not correct regarding capital of a bank? So which of the statement is not correct regarding the capital of a bank? Correct. Mirohit Raj, very good. 82,701. Which of the following statement is not correct regarding capital of a bank? A capital is divided into tiers according to the characteristic of each qualifying instrument. See, you want, pay attention, you want not correct, huh? Not correct. A capital is divided into tiers according to the characteristics of each qualifying instrument. For supervisory purposes, capital fund has two categories. The highest quality of capital with the bank is in form of tier 1 capital, and highest quality of capital with the bank is tier 2 capital. So which one of them is not correct? What do you think? Yes, what do you think? Okay, so got it everyone? So highest quality, which is the answer? D, very good. See, highest quality of capital is not tier 2. This is the answer. Highest quality of capital is not with the bank is tier 2 capital is wrong. Okay, it is not tier 2, it is tier 1. Tier 2 is known as a supplementary capital. Supplementary. Okay. Check this next one. The revaluation reserves are to be taken at a dash discount while determining the value of inclusion in tier 2. So what discount we are taking? 15% of the paid up shown in the balance sheet, 40% of the face value shown in the balance sheet, 55% of the value shown in the balance sheet, 60% of the value shown in the balance sheet. So at what percent discount will you take? At what percent discount will you take? Revaluation reserves. What do you say? Revaluation reserves are taken at what percent discount? They are taken at? Correct. C. C. Okay, C, correct. 100 minus 45, very good. Okay, 100 minus 45, correct. So it is 55% discount. Okay, 55. Next, general provisions and loss reserve are shown as a part of tier 2 capital, subject to maximum of general provisions and loss reserve. This is also a very important question. You will get one question in exam on this. All those kindly follow this. So, general provisions and loss reserves are taken at what percent discount? Not percent discount, at what percent? So, 9% of RWA, 6% of tier 2, 4% of capital funds, and 1.25% of RWA, risk weighted assets. So, it is D. Okay, D. Correct. 1.25% of the risk weighted assets. 1.25% of the risk weighted assets. Okay. Always remember this. See, pay attention. The general provisions are always taken at 1.25% of the RWA, and in numerical, what figure they give. Okay. Suppose if they give some figure and your answer, whichever of them is higher, you will be taking that. Okay, given figure or this, whichever is higher, you will be taking it. Okay. Which of the following instrument is not included in upper tier 2 capital? Upper. Now, what is upper tier 2 capital? Upper tier 2 capital is near to tier 1 capital. Near to tier 1. Okay, means the bonds over there are almost like tier 1 only, long term bonds. So, which of them are not taken in upper tier 2 capital? Perpetual cumulative preference shares, redeemable non-cumulative preference shares, redeemable cumulative preference shares, perpetual non-cumulative preference shares. So, which of them are not included in tier 2 capital? Not. Okay, not included. Perpetual cumulative preference shares. Okay, see, cumulative, non-cumulative. See, firstly understand, PNCPs, they can be taken in tier 1 capital as 81, additional tier 1. Okay, they can be taken in 81, additional tier 1. PNCPs are a part of tier 1 capital. So, which of them will not be included in tier 2? So, tier 2 PNCPs will not be included because they are in tier 1. Earlier, few years back, means almost 10-15 years back, PNCP was taken in tier 2, but now it's gone. So, now kindly note, PNCPs are a part of tier 1 capital and that also additional tier 1. Okay, PNCP, correct? PNCP and IPDI, correct? PNCP and IPDI are in tier 1. PNCP plus IPDI, both are in tier 1, additional tier 1, 81. Okay? Got it? Next. A bank is considering a commercial loan of INR 10 crores. This problem I had taken yesterday also, in the paid class also I took it. Okay? But this is the repetition because yesterday I took it, I think so, in some of the classes. But this is very important problem. That's why I am repeating it. This is from module D. Module D, REROC. Those who have not attended this, it is for them. Okay? So, a bank is considering a commercial loan of INR 10 crores. What are the parameters? Interest on the loan is 10%. Operating expenses are 20 lakhs. Probability of default is 3%. Loss given default is 50%. Economic capital is 12% of the loan amount. Risk-free rate is 5%. The REROC for this commercial loan is, who can find this out? Those who have attended the sessions, they will be able to find this out very easily. Let me try this. Let me try that. You should try it first. Now you try. Because this I have solved it 2-3 times. Okay? Give me the answer fast, then I'll skip this. If you give me the answer fast, I'll skip this. Yes, what is the answer for this? What is the answer? Yes, everyone. Such numerical on REROC, you will see it in the exam. Okay? See, what you have to do is this simple. First calculate, we'll do it fast over here. Okay? First calculate the interest part. Interest equals to 10 crores into 10%. So 1 CR. Operating expenses 20 lakhs, 0.2 CR. Okay, operating expenses 20 lakhs. Then third part is this, probability of default, loss given default. Okay, so this expected loss. So that is equal to 10 CR, okay, 10 crores into 3% into 50%. Loss given default is 50%. See, whenever you are asked expected loss in problem, see, it may happen that you might get a single problem of 1 mark over here, only 1 mark in exam. Anything they can ask you only single 1 mark question. So the answer is very simple, loan amount into probability of default into loss given default. Okay, so multiply this. What are you getting? 3% means 30 lakhs, 50 lakhs, 15 lakhs. 15 lakhs. So that is equal to 0.15 CR. We'll write it in crores, everything. And last one is economic capital. This also you might get it as a 1 mark question, single 1 mark question, 1 mark. Okay, this also you might get it as a single 1 mark question. This also will be a 1 mark question, separate. So economic capital over here is 12% into, what is that, 10 crores, 10 CR. So that is equal to 1.2 CR. This is your economic capital. But you want risk-free interest rate. So you want the returns. So that is called as ROC, return on capital, or ROI you can call it, return on investment. So 1.2 CR into, what is this, 5%, 5 upon 100 into 1 year, PNR upon 100, okay, into 1 year. So that is equal to what? 1.2 CR into 5%. 5, so 12 by the 60, right? 60. So what will it be? 65%. Na? 10% is 1.2, 10%, 12 lakhs. Yeah. So 6 lakhs. So that is equal to 0.06 crores. Everyone is clear on this? 0.06 crores. Got it? Yes, Merohit, you got it. But others are still there. Those who don't know. Okay? There are many others. How many of you have gone through this problem? Other than Merohit Raj. Merohit has already gone through this problem. What about others? Have you seen this problem? Yes or no? Type yes or no in the comment section. Have you seen this problem earlier? How many of you have gone through this problem earlier? Yes or no? Sincerely tell me. No to no, yes to yes. Yes? Everyone like the video, subscribe to the channel, click on the bell icon. Do this fast. Like the video, subscribe to the channel, click on the bell icon. Okay? So now this you got it. Now it's very simple. See this. 1 crore minus 0.2, subtract it. 1 crore minus your expenses, minus your expected loss, plus your returns. The whole upon economic capital. So you get it as 59.16. You get it as 59.16. Okay? Clear? Move on. Need to compensate for non-receipt of expected inflows of funds is called. Non-receipt of expected inflows is called as funding risk, time risk, call risk and liquidation risk. So, non-receipt of expected inflows. So, what is this called as? Non-receipt of expected inflows. What is it? Whenever you get the word expected inflow, expected inflow word, whenever you get it, it means you are talking of time risk. Kindly note, you are talking of time risk. Okay. So the answer is time risk over here. Expected inflows. Whatever is expected. So this is related to time. Okay, time risk. Got it? Whenever you have expected inflow word, and this happens because of, why does time risk happen? Time risk happens because of NPAs. If there are more NPAs, NPA, you'll always have a time risk because your returns will not be there. Okay? The credit risk assessment exercise should be repeated dash biannually, annually, once in 3 years, and none of the above. So now this is, you can say, difficult part also. Yeah, this is a difficult part also, or you can consider it, if you know it from ABM, if you have seen it, it's easy. So what is the answer? Yes. Let me see in the comment section. It is A. All are answering A over here. Let me see. Huh? So it should be done biannually. Half yearly means. Biannually means half yearly. Okay. So half yearly. Okay. So at least half yearly you must carry it out. Credit risk exercise. Which of the following statements is or are correct regarding the loan review officers? Loan review. Now this question was there in, this can be a question in ABM also. This loan review officer, it can be a question in ABM also, module C. But this question can be in BFM also. Okay. He can be the fresher without any expert knowledge on credit appraisal. He should also be well versed with the relevant rules and regulations that affect lending activities. Independence of loan review officer should be ensured. So which of them is correct? Is it A, B and C? I'll give you one more option. E. That is A, B and C. All of them. So one more option I'll give you. A, B and C. What do you think? Is it A, B and C? All of them? What do you think? Is it A, B and C? All of. So it is only B and C. Okay, correct. B and C are only correct. Okay, because he cannot be a fresher. This is not allowed. Okay, relevant law should be known. Independence of loan review officer should be always be maintained. Loan review officer should. What is loan review officer? See, loan review officer will always check your processes, loan processes. He should never have this business targets. Okay, he should never have business targets. The crystallization of contingent liabilities is called as funding risk, reputation risk, call risk, and liquidation risk. So what is it called as? Crystallization of contingent liabilities. What is it called as? The crystallization of What is it called as? Funding risk, reputation risk, call risk, and liquidation risk. Some of you are answering D. D is not the answer. Just now we discussed, no? I gave you that crystallization part, crystallization, okay? Crystallization is of two types, I told you. One is of Forex, second is of LC bank guarantee. So contingent liability means what? It is LC and bank guarantee. So crystallization of contingent liability, that will be known as call risk. Call, okay, it is known as call risk. Whenever you have crystallization of this contingent, means LC and bank guarantee, whenever you have to make the payment, that's actually called as call. Okay? Got it? This NRI case study, this is new. This I have not taken. Okay? Even in the paid class I have not taken this because you can't take everything over there. Okay? Important ones I have taken over here. This is quite easy, but you should apply your brains. Okay? Mr. Raj has returned from London for a few days. He is an NRI. He has earned what is this, 5 lakh through his business in London. He wants to invest the same in Bharat. He approaches your bank for guidance. Answer the questions. So now if Mr. Raj comes to you from London with $5 lakhs and he wants to invest, what will you do? I'll tell you mostly what the bankers will do. First answer will be, we don't accept dollars over here. Go to our central office. We have a branch in this city. There they accept the dollars. So many of the bankers will just try to avoid this customer, isn't it? Sincerely tell me, if tomorrow somebody comes to you with $5 lakh in your branch and says, I have to invest these $5 lakh, won't you try to avoid this person? Mostly. Many of the bankers treat this as a additional headache. Who will handle this dollars? If tomorrow some problem arises, who will take care of this? Right? But actually this should be sought for business. Sought for means you must always run for this business. Because it's very pure business and you are getting huge profits in it. Exchange rate profits you get it. Okay? So got the case everyone? Raj has returned from London, $5 lakh, then wants to invest the same, approaches your bank. So first one, which type of account can be opened under the foreign currency non-resident account? Suppose if you want to tell him that open FCNR account. So which type of account will you tell him to open? FCNR. Is it saving account? Is it current and saving account? Is it only term deposit? Or will you tell him to open all of the above? Yes? Which one? What do you think? You will try to open term deposit, correct? FCNR is only term deposit. This is actually called as FCNR B. FCNR B. This is the right answer. FCNR B is the right answer. Okay? So, term deposit account only. What do you mean by this B? FCNR B? B means bank. Okay? See the difference between FCNR and FCNR-B. Earlier this account was only FCNR. Earlier it was only FCNR when it was started in 1980s. At that time the exchange rate risk was taken by RBI in FCNR account. Then after 1991 RBI said no, now bank has to follow this exchange rate risk. So that's why it's called as FCNR-B. Okay. So it's only term deposit. Next, which of the following statements about non-resident ordinary rupee account is correct? So non-resident ordinary rupee account means NRO. Okay, NRO account, correct. It's bank, Mirohit. Okay. So which of them is true about NRO account? Cannot be held jointly with the names in the names of two or more NRIs. You want true, na? Is true. Yeah, is correct. Only term deposits are possible. Non-repatriable except for current income, for all current income, and not taxable. So which of them is correct over here? Which of them is correct over here? It is NRO. See, NRO account is always non-repatriable. Non-repatriable means what? Whenever you want to take the funds back, you will first pay the tax and then take it back. Okay, first you will pay the tax. So that is known as repatriable, non-repatriable. Okay, pay first the income tax over here, whatever you have earned, and then take it back. Okay, so non-repatriable, got it? Only this is correct. NRO account can have, kindly note, NRO account can have, which type of accounts are possible in NRO? Who can tell me? Which type of accounts are possible in NRO accounts? Yes? Which of them are possible in NRO accounts? Can anyone type it in the comment section? Which type of accounts are possible in NRO account? Yes? Saving current and FD, correct. Saving current and FD, very good. Okay, three types of accounts are possible. Saving current and FD, oh, always note that. Saving current and FD. And always remember NRO and NRE will always be in rupees. NRO and NRE will always be in rupees. Okay? FCNR will always be in this foreign currency. Now read this. This is a big question. Read it, everyone. Yes, it is. See, what is the question over here? Mr. Raj permitted in investing by way of partnership or a proprietorship concern in India through a capital contribution under which of the following conditions? Business must not be engaged in agriculture, plantation, or real estate business or dealing in immovable property with a view to earning profit of it. So this is correct. You want a correct one? Under which the amount, you are correct. So this is correct. The contribution must be by way of fresh inward remittances into India or out of balances held in NRE FCNR. So this is also correct. Third one, the amounts invested must be permitted to be repatriable out of India subject to the payment of taxes. So this is again, this is also correct. It is non-repatriable. So the answer is all of the above. Okay, the answer is all of the above. All. D is all of the above. All. Okay, so all is the answer. What is the maximum amount up to which Mr. Raj's father can gift him rupee gift to Mr. Raj in 1 year? So, what is the maximum amount which his father can give him gift? USD 250,000, USD 1 million, USD 25,000, no limit. So, what is the maximum amount which Mr. Raj's father can give the gift? Yeah, D is all of the above, Venkatesh. So now this question. Yeah, what is the question? Answer in this. It is 2,50,000. Very good. LRS. It is under LRS. Okay, liberalized remittance scheme. 2,50,000. This much Mr. Raj's father can give him. Okay, under LRS. What is the maximum extent of, now the case is over, case study is over, okay? What is the maximum extent of subordinated debt that can be included in tier 2 capital? Subordinated debt. So what is the maximum extent of subordinated debt that can be included in tier 2 capital? 100% of tier 2, 100% of tier 1, 100% of capital funds, and 50% of tier 1. What is the answer? What is the maximum amount of subordinated debt which can be included in tier 2? Yes? Let me see. Is it, what are you typing? D, 100% of tier 1? Oh, D. Yeah. See, the answer is actually subordinated debt. Okay, subordinated debt is always 50% of tier 1. 50%, kindly note. It is 50% of tier 1 capital. Okay. Why 50%? Means with what logic can you have 50% of subordinated debt? Firstly, what is subordinated debt? What do you mean by this debt? Subordinated debt means the debt which I take from my sister concerns. Reliance taking loan from Jio, Jio taking loan from Reliance, Tata Consultants, TCS taking loan from Tata Steel, Tata Steel taking loan from TCS. Subordinated debt. So how much can they take? They can take, I'll tell you now, look at this. 50% of tier 1 means what? It's actually equal to 100% of tier 2. They can take 100% of tier 2. Full my tier 2 capital can be only subordinated debt. 2 points you have to always remember in subordinated debt, means tier 2 capital. Tier 2, 2 points you have to remember. One is that loss and contingency reserve 1.25%, and second is subordinated debt 100% of tier 2. These 2 points you have to by heart, means by heart only. There is no other option. One is 1.25% of that RWA. Okay, that is what that loss and contingency reserve. Okay, that is 1.25%. And second one is this. So these 2 points you will remember about tier 2 capital. Okay. Under which method of value at risk calculation? VAR is calculated using sample of randomly generated price scenarios. Randomly generated. So what will be the answer over here? Randomly generated price scenarios. Yes. Randomly generated price scenarios. So that is a part of Monte Carlo. Okay, Monte Carlo simulation. That is a part of Monte Carlo simulation. See, this is a part of your VAR. Okay, this is the part of your stress testing. Stress testing. Okay, Monte Carlo simulation is a part of your stress testing. Okay. There are 2 testing. One is back, second is stress. In back testing, you do the history of last 10 years. And in stress testing, you take the scenarios, future scenarios, which you have not seen. Okay? When a bank provides a loan of 5 crores in accordance with RBI guidelines for a period of 5 years at a rate of 1% over MCLR. So period is 5 years, rate is 1% over MCLR. At present, MCLR is 9%. The loan shall be repaid in 4 years. Okay, 4 yearly installments with 1 year moratorium. Funding of the loan shall be done from a deposit of 5 years. So funding is again 5 years. Okay. Of the same amount, the interest rate of it being 6%. So rate of interest is 6% over here. Now this is fixed. What kind of risks are associated with such a loan given? So what are the various types of risks associated with it now? See, understand the difference. What has happened in this? There is a loan, pay attention, there is a loan and there is deposit. Okay. Loan is what? Loan rate is what? Tenure. See, tenure, okay? Tenure. For loan and deposit, both are 5 years. So that is same. Amount for loan and deposit. What is that? 5 crores, 5 crores. Both are 5 crores. 5 CR and 5 CR. Both are same. Okay. Then this 4 yearly installments, that is of no use. Then rate of interest, ROI. ROI over here is for loan, the ROI is MCLR plus 1. So MCLR plus 1 for loan, and for deposit it is 6%. This is the overall scenario. Okay, this is the overall scenario. So what is the type of risk which the bank will be facing? funding risk, liquidity risk, reinvestment risk, embedded option risk. So which of them the bank will be facing? Funding risk, liquidity risk, reinvestment risk, and embedded option risk. 1 to 3. Embedded option will not be there. Embedded option means what? Chalo, let's study one by one. Funding risk. Can there be a funding risk? Yes, there can be a funding risk. Why? Because here, see, whenever you have the rate of interest same, okay, means if both are fixed only, then there is no problem. But one is floating, this is floating, this is fixed. Okay, so this will create some gap. If the rate of interest changes, then it will create some gap. There you will be short of funds. Also, one more part. If this deposit goes, if embedded option risk, see, what is embedded option risk? Embedded option risk means if the deposit closes, the depositor comes and takes his money back. So that will lead to embedded option risk. Also, if the loan is repaid, that is also embedded option risk. So this can always be there. Okay, this will always be there. Funding risk, it will be there because if the rate of interest changes, you will be short of funds or excess of funds. Liquidity risk, same problem. See, whenever you have two things separate, this is called as basis risk. Basis. Okay, whenever the rate of interest of loans and deposits change at different proportions, it is called as basis risk. So this name is not there over here. It can be one name can be over here also, basis risk. It can be basis risk also. So this is also one problem. Liquidity will face. Reinvestment risk, that is also one problem. Why? All of them will be there. Because reinvestment risk means what? Whatever I have got it as a interest from that loan, that I have to reinvest somewhere. That is called as reinvestment risk. Means whatever EMI I get, quarterly EMI. This quarterly EMI I have to invest it somewhere. Invest means what? I have to give either a loan to somebody or I have to purchase somebody. But that will always have a problem of rate of interest. Will I get it at the same rate of interest of loan or will I get it at a lower rate of interest? So that is known as reinvestment risk. So it will always be there. And embedded option is always there. So the answer is D. Okay, all of the above. From the below statements regarding commercial paper, choose the correct ones. Commercial paper. Choose the correct one. For issuance of a CP, credit rating shall be P2 of CRISIL or such equivalent rating agency by other agencies. All India FI primary dealers cannot raise finance through CP. A company to issue CP should have tangible net worth of 4 crores in the past audited balance sheet. So which of them is true? All of them, A, B and C? Which of them is true over here? All of them, A, B and C? True or no? Yes? So what are you answering? C, A and C only. Okay, A and C. Chalo. So A and C is correct. Okay. But what are the remaining two conditions? Chalo, this is done. Agreed. A and C is correct. So this primary dealer can also raise. Now remaining, see, there are total 4 conditions in CP. 4 conditions. 4 conditions in CP. Okay. Out of these, 2 are these. This is 1. This is 2. What is 3 and 4? 3 and 4 is the customer should have been sanctioned this working capital limits, WC limits. WC limits sanctioned. Okay. And number 4, it should be a standard account. Standard account. It should be a standard account. So these are the 4 conditions. Okay, it should be a standard account. Got it? So the answer is C over here. But remaining 2 conditions are these. The customer should be sanctioned WC limits and it should be a standard account. Okay? Got it, everyone? So next. This is a tough numerical, huh? Very tough. This is a tough numerical. Let's solve this. Because both you won't get it in exam, but one of them you will get it in exam. See what is given? On 31st March 2016, you see the following information about the bonds. So name of the security is given, face value is given, maturity date is given, coupon rate is given, coupon date is given. So name of the security is what? 0 coupon bond. Face value is 10,000. Okay, face value is 10,000. Maturity date is 31 March 2026. Remaining these 2 are NA. Leave them. We'll only focus on these 3. Okay. So name of the security 0 coupon. Face value 10,000. Maturity date 31st March 2026. Second one, T-bill. Face value 1 lakh and maturity 24 June 2016. 16 or 26? 16. Okay? Yeah. March and June. Correct. T-bill is for 3 months only. Okay? Yeah. So, if 10-year yield is 7.5%, see 10-year yield is 7.5%, what is the price of 0 coupon bond? Now you want the price of this 0 coupon bond, this one. You want the price of this 0 coupon bond. How to solve this? How to solve this? Everyone, check it. Yes, you want the price of the 0 coupon bond. Huh? Kindly note, you want the price of 0 coupon bond. Can anyone solve this? You want the price of 0 coupon bond. I'll tell you, simplest problem, simplest is this one. Simplest. There can't be a simpler problem than this in BFM. But you are not getting that click. That click is very important. Okay? That click is very important. If you get the click, it will be the simplest problem. Okay, let me show you. Am I having a free page? Yeah, this is a free page available. Yeah. So let me show you how to solve this. Anyone? Any trick, anything, any idea? See, what are these basically? 0 coupon bond. What is this basically? This is basically a bond. Okay? How to find the price of a bond? Can anyone tell me? How to find the price of a bond? Okay, price of a bond is what? Price. See, price of a bond equals to price value divided by 1 plus R raised to N. plus this. For this, you have that annuity formula, C into 1 plus R raised to n minus 1 the whole upon R, 1 plus R raised to n. This is the formula for price value of the annuity, present value of the annuity, right? And this is present value of the face value, right? Of that redemption amount. Got it? Now, can anyone tell me that which element over here? See, we are talking of zero coupon bond. Huh? We are talking of zero coupon bond. So, can anyone tell me? Very important trick. This is the most important trick over here. Can anyone tell me which element over here, this or this, will be zero? Which element over here will be zero? This will be zero or this will be zero? Let's say coupon, price for coupon, PV for coupon and PV for face value. So which part will be zero? We are talking of first bond, zero coupon bond. Let me see. How many of you have got this trick of solving it? Correct. Who's this? Creative Thoughts. I can't get your name, but Creative Thoughts 6540. Others. See, what are we saying? Name itself is zero coupon bond. Zero coupon, zero coupon. So when I say zero coupon means this is zero. So my present value of this zero coupon bond is only this much. Face value upon 1 plus R raised to n. So simple. What is face value? Face value is given over there. What is it? 10,000. And R is this 7.5%. So do it. So simple. 10,000 upon 1 plus what was that? 7.5%? 0.075. Right? 7.5% raised to n. What is the period given? 26C. 16. Today is 31st March 16 and the maturity is 26. So 10 years. Huh? So this will be raised to 10. This will be raised to 10. So that is 7.5 only, no? Yeah. So now solve this. 10,000 upon 1.075 raised to 10. Everyone solve this now. 10,000 upon 1.075 raised to 10. What are you getting this answer? Only denominator answer I want. What are you getting it? All of you. What are you getting it? 1.075 raised to 10. What are you getting it? I want only for coupon now. This below part. Okay. I want only denominator now. 1.075. So let me also try. What is it? Because I have also not tried this problem. Raised to 10, na? 10 years. So equals to 2.061 I am getting. 2.061. I am getting it as 2.061. Correct? So I am getting this as 2.06. So 10,000 upon 2.06. So what will you get? Roughly 4,000 something you must get it, right? 4854 you are getting. 4854. Roughly you get the same answer. 4854. This is the present value of that zero coupon bond. So simple, isn't it? Only you must get this trick that present value of any bond is equal to present value of the face value plus present value of the coupon. Now if zero coupon bond means coupon is zero. So only face value now. 5 marks case study this will be. If it comes, this will be a 5 marks case study. Now second one, T-bill. Solve this for T-bill. Face value is 1 lakh. Maturity is 24 June 2016. Now look at this. Only 3 months. 31st March and 24th June. Calculate the days. Days are very important over here because T-bill is for short period. If the T-bill is trading at 98,000, what is the annualized yield? So now the price is given 98,000. Price is given 98,000. So what is the annualized yield? Think of it, everyone. This is again simple, very simple. This is again very simple. Very simple. Like the video, subscribe to the channel, click on the bell icon. Like the video, subscribe to the channel, click on the bell icon. Okay, like the video, subscribe to the channel, click on the bell icon. Okay. So what is the T-bill trading at 98,000 now? So see, you want annualized yield. Huh? This is also very simple, but again, dimag ki batti jalao, right? Mentos. So what next? See, look at this problem. I am investing 98,000 and on 31st March. Now look at these dates. Huh? On 31st March, I am investing 98,000. Okay, and on what is that second date? 24th June, I am getting 1 lakh rupees. See, face value. T-bill is always issued at discount. Kindly note. T-bill is again a zero coupon bond only. T-bill will never give you coupon. Never. T-bill is again a zero coupon bond. So this is again zero coupon bond. So I am investing 98,000 on 31st March and on 24th June I am getting 1 lakh rupees. Okay, 24th June I am getting 1 lakh rupees. Okay, so what is the now you have to calculate two parts. Number one, what is the profit? Profit equals to 2,000 rupees. So I am getting 2,000 rupees profit. But in what period? What is the duration? So 31st March means now March, April, May, June. Right? April, May, June. So April is of 30 days. May is of 31 days. So 30 plus 31, 61. Plus this 24th June. So 24, add 24. So 61 plus 24. Okay? 61 plus 24. So 65, 75, 85. Right? Days are 85. So I am getting 2,000 rupees in 85 days. And for that, how much am I investing? So my investment is investment. What is my investment? What is my investment for getting this 2,000 rupees? Can anyone give me? What is my investment for getting this 2,000 rupees? What is my investment for getting 2,000 rupees? Yes? What is my investment for getting these 2,000 rupees? Everyone like the video, subscribe to the channel, click on the bell icon. Okay, everyone like the video, subscribe to the channel, click on the bell icon. Don't miss this. Don't miss this. Everyone do it fast. Like the video, subscribe to the channel, click on the bell icon. Don't miss this. So, what is the answer? For this, what is the investment I am doing? I am doing 98,000 only. Right? I am doing only 98,000 investment. 98,000. So I want the annualized return now. See, in 85 days, I am getting 2000 on an investment of 98,000. So in 85 days. So yearly, how much will I get? Yearly. Okay, yearly, how much will I get? So this you have to find out now. Okay. So now, what is the percentage? First, find out this profit percentage. Okay. So 2000 upon 98,000. 2000 upon 98,000. First, find this out. What is the answer? Into 100 you want it, you multiply it with 100 also then. 100. 2000 upon 98,000 into 100. First multiply this. What are you getting? 2000 upon 98,000. So 2 upon 98. 2 upon 98. Okay. Into 100. 100. So you will get it 2.0408. Okay. So you get it 2.04. 2.04. 1 I'll take it because it's 08. But this is in how many days? This is in 85 days only. So what will I do now? 2.041 into 85, right? 85 days I am getting, right? So I want it for 365 days now. 365 days. So I'll do this reverse. 365 upon 85. Do it reverse because in 85 days if I am getting this much, then in 365 days how much will I get? Getting this point. See, in 85 days I am getting 2.041% returns. So in 365 days how much will I get? So cross multiply. So you'll get this as into, do it, 365 upon 85. So 8.76 I am getting. I am getting it as 8.76. So it's okay. 8.86 is also right. So 8.76 I am getting. Okay. So the annualized yield is 8.76%. Very tough, and you may get this as a 1 mark question also. You may get it, only single line question you may get it. Only single line. 1 mark for this, 1 mark for this. Okay. Or you may get it a 5 marks case study also. Some combinations they'll do it and ask. But surely one question on treasury bill and zero coupon will be there in exam. One question on zero coupon and treasury bill. Compulsory, numerical will be there. Okay. Very tough one. If you understand it, it's easy. Otherwise, it's really tough. This numerical. Okay. Understood it, everyone? Type yes in the comment section. Understood it, everyone? Like the video. All of you like the video. Subscribe to the channel. Click on the bell icon. Like the video. Subscribe to the channel. Click on the bell icon. Everyone do it fast. Subscribe to the channel. Click on the bell icon. All of you. Are you enjoying it? Are you enjoying such numericals? Yes, are you enjoying the numericals? These are really tough ones. Means tough means brains. They really require bankers' brains, right? It's really brains are required over here. Otherwise, it's not possible. See, when you solved it, it was so easy. But before solving, when you saw this numerical, just you saw it without any guidance. What was it? It's really tough. Okay? Correct? Because see, everything is easy, simple. I'll tell you simple logic. In any treasury, because I've been handling treasury for many years now. In any treasury, it's simple calculation of PNR upon 100. Everywhere it's only one calculation, PNR upon 100. Okay, everywhere you will get this calculation only, PNR upon 100. Because treasury does not work on any tough formula. It only works on simple interest formula, PNR upon 100. Only adjust the number of days, adjust the amount, adjust this, that's it. Treasury is an easy game, okay? Oh, this is also tough. VAR numerical, this is also really tough. Market value of an asset, tough means, see, up to the time you understand it's tough. Once you understand, it's very easy. Market value of an asset is given as 20 million. Daily variance is given as 0.0005. Confidence level required is 95%. Find a yearly variance. Working days are given as 250. And Z corresponding to 95% is given as 1.65. It will be given in the exam. Now, again, tough. All of you will be saying tough, tough, tough. Right? Every one of you will say now tough because it's really tough. But once you solve this, then you will say nothing easier than this. Nothing easier than this. Okay? So, how to solve this? Anyone? Let me see how many of you are getting this. Some comment section. Anyone is able to get it? Anyone? See, now I'll show you. Again, you will say, sir, so easy. So easy. And such numericals you see in the exam for 1 mark. So easy, you will say now. First, see, what do you want? Yearly VAR. For that, you need to first find out daily VAR. Now, daily VAR is given, variance is given, not VAR is given. So, daily VAR you need to find out, daily VAR. See, these numericals you will not find it in any book nowadays. These numericals are from the old BFM book. Means at that time, see, from where did I take these numericals, do you know? These numericals were there when the subject BFM was not there. It was called as risk management. At that time, in that book, all these numericals were there. And nowadays, they are asking all these again. All these tough parts are being asked again because they really want to check your knowledge. They don't want to check your calculation speed. They don't want that. So now daily VAR you wanted, VAR. What is the formula for daily VAR? Again you will say very easy once you do it. It is that factor given, this is a factor. Factor multiplied by what is given? Daily variance, dV, I'll write it, dV. Into your corpus. What is the corpus? Value, asset. Okay, asset. So what is the factor given? This factor will be given to you in exam. 1.65. Okay. 3 factors are never given to you in exam. 68.3, that is always 1. 95.5, that is always 2. 99.7, that is always 3. These 3 will never be given to you in exam. This you will have to remember. Okay? And otherwise anything else they will give you. So 1.65 over here into what is daily variance? 0.0005. 0.0005 into what is the asset value? 20 million. 20 million means very big amount now. Huh? Million means 20 million. Now, should I write this? There are 6 zeros. Million means 6 zeros. Huh? It is 20 million. So, 6 zeros. Got it? So, this is really tough. Not tough actually, lengthy one. Not tough. Okay? So, daily variance is given as what? Daily variance is 0.0005. One point. Yeah. So it was, yeah, square root of daily variance. I forgot to take this. Square root of daily variance. So factor into square root of daily variance into asset. So what are you getting this answer? It is square root, square root of daily variance. So what are you getting this as the answer now? What I am getting is 0.74 I am getting it. 0.74. Are you also getting it 0.74? Check it everyone. Are you also getting it 0.74? Check it everyone. Write your answer. Write your answer. Just write it in the comment section. Everyone. Like the video, subscribe the channel, click on the bell icon. All of you. So, everyone, what is the answer? Are you getting it 0.74? I've got it 0.74. 1.65 into square root of 0.0005 into 20 million. So this million will be 6 zeros, 20 and then 6 zeros. Is anyone getting this? How many of you are getting this? Got it? I am getting yes. Many of you are giving the answer yes over here. Yes, sir. Okay? Getting it now? See, try this. See, in exam, you might not get such a big figure. Okay? So, I am getting the answer as 0.737. So, take it 0.74 roughly. So, that is daily VAR. But what do I want now? I want yearly VAR. So, yearly VAR is what? Yearly equals to VAR. So, that is equal to 0.74 daily VAR into square root of number of days. What are number of days? 250. 250. So, that is equal to 0.74 into square root of 250. Do it everyone. 0.74 into square root of 250. All of you. 0.77, na? It's okay. 3 Harsha, it's okay. 0.77 is okay. See, anything 0.7 is okay. Anything related to 0.7 is okay. So now what are you getting? 12.17? Yeah. I am getting it 12. Okay, I have got it 12. So 12.17 is okay. 12.17. Okay. So this is your daily yearly VAR. This is your yearly VAR. Okay. Okay type. Not that tough, not that easy. Only formula should be known. VAR of an asset is 10 million. Asset A. VAR of an asset A is 10 million. VAR of an asset B is 20 million. Both A and B are unrelated. Find the combined VAR. So now you want the combined VAR of both. Okay. So the formula for this is A plus B the whole square. Okay, you remember this? A plus B the whole square. In school level we did it. A plus B the whole square. Okay. Right? A plus B the whole square. So here what we will do is, see, A plus B the whole square. You know this formula, anyone? You know it now? A square plus B square plus 2AB. Right? Into what we will do is, this much is the formula. right? Into their correlation coefficient R, that is also taken in our treasury. So A plus B the whole square is this. But what do we want? We want a combined VAR. So A plus B equals to square root of this 2 will go on this side. So square root of A square plus B square. Now this part 2AB into R. What is given? Both A and B are unrelated. Unrelated means what? Now can anyone think? When I say A and B bonds are unrelated. So this R means what? Coefficient of correlation. This R is coefficient of correlation. So now you tell me, for unrelated bonds, what will be the coefficient of correlation? For unrelated bonds, what will be the coefficient of correlation? Anyone can think? EBM, just now you have done it. What will be the coefficient of correlation for unrelated bonds? Can anyone tell me? When any two bonds are not related to each other, or any two activities are not related to each other, their R is, how many of you can answer this? Their R is what? Forgot? Everyone forgot? Just now we did ABM, right? R is equal to 0. When any two bonds are not related to each other, R is 0. So this whole term will become 0. So square root of A square plus B square. So that is equal to square root of A square is what? 10 square. 10 square plus 20 square. Right? 10 and 20. So 100 and 400, 500. So square root of 500. What is the answer for square root of 500? Correct. 0 it is. What is the square root of 500? $22.36 I am getting. I am getting it as 22.36. What are you getting? Are you also getting the same answer? 22.36. So the combined VAR is 22.36. Are you getting it? 22.36. All of you. Are you getting this? 22.36. Okay. Move on. Clear? See these numericals, this one, or even this earlier one, this one is compulsory. This one is very much compulsory in exam. This numerical, this second one, this may come or may not come. But you will definitely get a question on daily VAR and yearly VAR. Compulsory, yearly VAR you will definitely get a question. Okay, compulsory this one. This part you may not get, but this part you will get it. Okay? And this third question, you may get it, you may not get it. I am not saying you will definitely get this question. There are chances you may not even see this question because this is a tough one. This no one knows. This is actually treasury part, real treasury part. Okay? So this you may not get it, but first two, there are high chances. Same thing. Which of the following action can help a bank to satisfy its funding needs? So which of the following action can help the bank to satisfy its funding needs? Let's do some theory now because many numericals have been done. So which of the action will help the bank to satisfy its funding needs? To dispose of liquid assets, to increase short-term borrowings, to increase capital funds and liabilities of term nature. It is D. Very good. This question is from module D. Okay. This question is from module D. Okay. There are methods of satisfying the funding needs. There are two separate questions on this. So D is the answer. The Reserve Bank of India permits Reserve Bank to invest the reserves in following type of instruments. So where can Reserve Bank invest its money? See, this is again a different question. Where can RBI invest its money? Deposits with Bank of International Settlements and other central banks. Deposits with foreign commercial banks. Debt instruments representing sovereign and sovereign guaranteed liability of not more than 10 years of residual maturity, and all of the above. What do you think? Let me see. Yeah, what is the answer? D, 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 D. Yes, D. Okay, all of the above. Because RBI can invest the funds in only these 3-4 categories. Okay, up till now. Further, we don't know. Tomorrow, RBI will change its rules. Okay, so deposits with BIS, deposits with foreign commercial banks. Commercial banks means Citibank, HSBC, they can invest there also. And for not more than 10 years of sovereign government. Okay? So all of the above. Which of the following is a part of liquidity risk? Funding risk, time risk, call risk, and liquidation risk. Which of them is a part of liquidity risk? Huh? Think. Which of them is a part of liquidity risk? Yes, which of them is a part of liquidity risk? What is the answer? Liquidity. Huh? We want liquidity risk. Which of them is a part of liquidity risk? B. So right. Venkat Susri Harsha. Creative thoughts. Correct? Very good. B is the answer. B is the right answer. All of them are liquidity risk. All of them given are liquidity risk. Okay? All of them are liquidity risk. What is liquidity risk? Basically, what do you mean by liquidity risk? Liquidity risk means short-term funding I am not having. That's the meaning of liquidity risk. Short-term funds I don't have. To pay my daily expenses, to pay my EMIs, to pay my depositors, anything. I don't have money. So the answer is this. Okay? Which of the following statement is not true for RTGS? Simple one, quite simple. In RTGS, transactions are processed continuously on a T by T basis throughout the day. The RTGS is primarily meant for large value transactions. The minimum amount to be remitted through RTGS is 500 and maximum is 2 lakh. And RBI has waived the processing charges levied by it for the transactions. Now, if somebody doesn't know this, then that person needs to take leave from the bank for 7 days. right? If somebody doesn't know this, somebody will have to take the leave from the bank, right? For 7 days and go back to the basics of life. पर्वतों में जाके रहो, right? पर्वत, mountains. Do some, because if you don't know this regarding RTGS, then it's very difficult life, okay? Right? Mountains में जाके, Himalaya, go directly to Himalaya if somebody doesn't know this, okay? So, correct, this is not right. Need to replace withdrawal, this we have done, not done. Need to replace net outflows due to unanticipated withdrawals or non-renewal of deposits is called as unanticipated withdrawals. Unanticipated withdrawals. When you hear this word, what should strike your mind? Unanticipated withdrawals. When you see this word, immediately something should strike your mind. It is embedded, correct. Embedded option, very good. It is embedded option, okay. It is embedded option risk. Unanticipated withdrawals or non-renewal of deposit, okay, embedded option risk. A prerequisite for establishment of an effective risk management system is the existence of robust MIS. What does MIS stand for? Again, if somebody doesn't know this, Himalaya, direct shift to Himalaya, okay? If somebody doesn't know this, again shifting back to Himalaya, leave the banking. So what does MIS stand for? Manual Integration System, Manual Information System, Management Information System, correct? C. It is Management Information System, MIS, okay? MIS. Now this one, this is tough. If you don't know this, you need not go to Himalaya, because this is really tough, okay? Exposure is given as 100 lakhs with a tenure of 3 years. Eligible collateral is A plus debt security, 30 lakhs with a residual maturity of 2 years. Haircut on collateral is 6%. Table of maturity factor shows haircut as 0.25 for remaining maturity of 2 years. Calculate value of exposure after risk mitigation. This is real tough one. It's not that simple, and it's a compulsory question in exam. Again, look at it. Huh? This is a compulsory question in exam. Compulsory. Sure question in exam, sure. Compulsory question in exam. Okay? So how to solve this? See, there are basically 4 haircuts which you have to remember. 4 haircuts. HC, okay, HC, then HE, HFX, and one more is MF, maturity factor. Okay, these are the 4 main haircuts. Okay, these are the 4 main haircuts other than my haircut. Okay, so my haircut is the best, means no haircut is required for me, right? So, no haircut is required for me, means these all haircuts you need to think, but for my haircut nothing, no thinking, right? Right? So, Okay, jokes apart. Okay. See, one should always be happy, or one should always be satisfied. Many people I have seen that they are unsatisfied. I don't have hair, I don't have this, I don't have that, I am not fair. See, we must always think of positive sense. At least I've got the head to think, isn't it? Somebody has not got some fair skin. Many of the students or many of the human beings I have seen, no yaar, I am not fair, I am blackish. What is this? You have got 2 hands, 2 legs, 1 head to think, 2 eyes. Think of those persons who don't have any of these. Somebody doesn't have eyes, somebody doesn't have ears, somebody that can't speak. So we should be happy with what we have, isn't it? That's the way you can live. Otherwise you can't live. Okay? So always we should be happy and satisfied with what we have and try to move ahead. See, satisfied doesn't mean that you will not work. You should work to earn more, to get to the higher levels. But even there you should be at a satisfied level. You have to mark a balance between satisfaction and working. Chalo, move on. So here, haircut for collateral. See, what is given? Haircut for collateral is given as 6%. So this is 6%. Now haircut for exposure. Haircut for exposure is always 0. Well, this has been given by RBI only. RBI says do not take the haircut for exposure now. 0%. Okay? Haircut for FX, if it is in the same currency, okay, then it is 0. And if it is different currency, then it is 8%. Okay? If it is in the same currency, it is 0. If it is in different currency, then it is 8%. And MF you have to find out. This you will have to find out. Okay? So now here if you see, HC is 6%, HE is 0, HFX is 0 because they are both are in the same currency. Look at this. Loan is also in rupees and collateral is also in rupees. So same currency, so FX is 0. So these two are gone, cancel. Only these two remain. So now first apply HC, haircut for collateral. See right now what is the collateral given? 30 lakhs. 30 lakhs is the collateral. In that haircut is to be applied. So always remember, whenever you apply haircut to collateral, it will always be reduced. You will always reduce it, right? So what will be my next collateral? Adjusted collateral. So my collateral will be collateral. What will be my collateral now? 30 lakhs into 94%. See, 6% is gone. Haircut is to be reduced. So 6% is gone. So 30 lakhs into 94%. So now solve it. What is it? What is the answer? 30 lakhs into 94, na? Yeah. 94 only, na? Yeah, correct. So, what is the answer? 30 lakhs into 94%. What are you getting? 30 into 94, 0.94. $28.2? Correct. So you are getting 28.2. Everyone got this 28.2. So 28.2 now. 28.2. Now MF, maturity factor. Now what is the formula for maturity factor? Formula for maturity factor is, see this factor. This you will have to remember now. Maturity factor formula. How many of you remember this? We have done this in the paid class. Okay, this is just I have taken it from there only. We have done it in the paid class also. So how many of you can solve this? Anyone? Yes? So, capital T, remember this? We did it, right? Capital T minus 0.25, capital T, T minus 0.25 upon, it was, T minus 0.25. Okay? So, it was small t first, small t above and capital T below. Small t minus 0.25 upon capital T minus 0.25. Small t was for, anyone remember? Small t was for this 2 years, this collateral, and small capital T was for loan. So solve it. So 1.75, see what is it? 2 minus 0.25 upon 3 minus 0.25. So you will get it 1.75 upon 2.75. So what are you getting? 1.75 upon 2.75. So you are getting it 0.63. 0.63, are you getting it? 0.63. Right? 0.63. Are you getting this? 0.63 everyone? Just check the answer. I have not tried it. I don't know. Are you getting 0.63? Okay. So I'll take it 0.63 because all are writing 0.63. So now what? Adjusted collateral into 0.63. Now take this. So what is my collateral? Again, see, this was first adjustment. This is second adjustment now. So again collateral equals to what was it? 28.2 into 0.63. 28.2 into 0.63. So what are you getting? 17 point something? 17.9. Are you getting it? 17.9? 17.9. Okay? Are you getting it? 17.95. Okay, 5 also? Okay, 5. Take 5 also. 5. 17.95 you are getting. Right? There 17.95. Okay? So 4, 5, take anything. So what is the value of the exposure now? Value of the exposure is what? So exposure equals to, look at this, exposure equals to your loan amount. What is the loan amount? Loan minus collateral. So what is the loan amount? 100 lakh. Okay, 100 minus 17.95. So take it, you can take it 18 also, no? Or no? Take it, chalo. 1700 minus 17.95. So what are you getting? 82.05. Okay. So 82.05 lakh. Okay. So this is what you are getting. 82.05 lakhs. Okay, all of you. So we are getting this 82.05 lakhs. This is the value of the exposure after risk mitigation. Complete risk is removed. Oh, you are not able to see this? I'll write it above. See the answer, I'll write it over here. 82.05. Okay. Now you are able to see it? Yeah. Okay. Got it everyone? Clear? Now what we'll do, we'll take a break of 10 minutes. 10 minutes. Okay, we'll take a break of 10 minutes. Okay, and we'll come back at around 8:10. So we'll come back at around 8:10. Okay? Break of 10 minutes. And we'll come back at around 8:10. Okay? You also have some tea, coffee, or have some dinner. Okay. So, hi, welcome back. Everyone join fast. Everyone join fast. Welcome back. So, let's move on now. Okay. So, let's move on. Okay, chalo. Which of the following are issued for a tenure less than 91 days to meet the temporary cash requirement of the government? So, which of the following are issued for less than 91 days? Okay. So, commercial paper, cash management bill, treasury bills, and certificate of deposit. So, which of them are issued for less than 91 days? See, 91 days and above is treasury bills. What is, okay, let me see your answer. Let me see the answer from your side. Yeah? It is CMB, correct? CMB, cash management bill. CMB. Always remember, this is less than 91 days. Okay, and treasury bills are 91 to 364 days. Okay. So less than 91 days is always CMB, cash management bills. Okay. Next. ABC Limited has a risk-weighted asset. If the credit and operations risk are 500 crores, market risk is 200 crores, paid up capital is 100 crores, free reserves are 200 crores, PNCP are 300 crores, provisions for contingencies are 100 crores, revaluation reserves are 200 crores, subordinate debt are 100 crores. Calculate the total capital of XYZ Limited, capital, and second, what we'll do is we'll find out RWA also. Calculate the RWA. Is RWA possible? Risk-weighted asset. This risk-weighted asset for this ops risk is given? No. Chalo, yeah. So let's calculate the capital first. Tier 1 and Tier 2 capital. Everyone. Find this. Calculate the Tier 1 and Tier 2 capital. First, Tier 1 capital. All of you, try to solve this. Tier 1 capital first. Tier 1 capital first. So, of RWA, let me see RWA. RWA is given as what? Operations, credit, achha, all the three are given. Okay, yeah. I was thinking if credit and ops, all the three are given. So it's okay. Now everything is okay, yeah. So, you have to find out the capital now. Capital is what? Tier 1 and Tier 2. First, find out Tier 1. What are the elements of Tier 1 capital? See, Tier 1. Let's calculate Tier 1 first. All of you. Okay? So, Tier 1. For Tier 1 capital, what do you have? First, you will have to find out CET1. Common Equity Tier 1. So, what is CET1? You have free reserves, share capital is given. Paid up capital is given. See this, 100 CR. So, CET1 is 100 plus free reserves 200 plus free reserves 200. Then net profit, is it given? Net profit, paid up capital is given, free reserves, net profit is given? No, right? So leave it. Revaluation reserve, is it given? 200. But this is to be taken at 45%, 55% discount, so 45%. So solve this. 100 plus 200 plus 200 into 45% means 90 it will be, right? So 300, 390. 390. This will be your CET1. Okay, this will be your CET1. Now find out 81, additional tier 1. 81. So 81 will include what? PNCP and IPDI. Perpetual non-cumulative preference shares and innovative perpetual debt instruments. So what is given? PNCP is given 300. So 81 is what? 300 plus IPDI. Is IPDI given over here? Not given, right? So leave it. So only 81 is 300. Okay. So tier 1 capital you have got it. Tier 1 is what? 390 plus 300. So 6 T1 equals to 690. This is your tier 1. You want total capital, but total. So tier 1 is this. Okay, 690. Now tier 2. Tier 2 will include what? All the remaining elements. See, now whatever is gone, leave it. So this is paid up capital gone, reserves gone, perpetual non-cumulative preference share gone, provision for contingencies, this is remaining. So that is what given? 100 CR. This is one remaining, one. Second one remaining is this subordinate debt, 2. So these two are remaining, provision for contingencies and subordinate debt. Okay. So out of this now we'll focus on T2. Let me see if I am having the page over here. Yeah, I am having. Say this. Now T2. Pay attention on T2. T2, two parts are given. Number 1, subordinate debt. We'll write simple one first, subordinate. So that is whatever is given, take it completely. Whatever is given, take it completely. So what is given? 100 CR. Okay, take 100 CR, complete. So subordinate debt, you need not change anything. Take 100 CR. Now only contingencies, this is something separate. Provisions. Provisions for contingencies. How to solve this? Okay, the figure is, just now we discussed when we started this session. 1.25% of RWA or given figure, given, whichever is higher. Whichever is higher. Okay. So now solve this. What is the given figure? 100 CR. Okay, so given figure is 100. So this is 100. Okay, this is 100. Now 1.25% of RWA. So RWA is what? Risk weighted asset, credit and operations. 500 CR and market risk is what? 200 CR. Both are given. So total RWA is what? 5 plus 2, 700. Right? So it is 700. So RWA equals to 700 CR. Okay. Now 1.25% of 700. So 1.25% of 700 CR. What will be the answer? Very less it will be. Okay. 1.25% of 700 is what? 7 rupees, 7 CR something. Okay. So something around 7 point something or 8 you can take it round. Okay, 7 point something CR. What are you getting? 1.25% of 700. 8 point something you should get it. 8 point. What are you getting? 8 point. High. It is always high. Whichever is high. Okay. Because you are making a provision. Okay, see, always remember you are making a provision. Provision is always on the higher side. Provision should always be made on the higher side. It should never be on the lower side. Okay. So it is 8.75. Okay, 8.75. So this is 8.75, 8.75, okay, CR. Got it? So now this much provision I have to make, 1.25% of 700 CR, yeah, or this, or given figure is directly 100, right? Yeah. One second. Right. Okay. No, one second. Arun, just one second. Let me check because I'm also checking that only. Hold on. Because in so many calculations now, sometimes things go here and there. It is lower. Okay, lower. It's lower of them. Arun, it's lower. So you take it over here, lower, not higher, huh? Lower it is. Lower of this. Okay. Because some are higher, some are lower, some things are higher. Okay, so this is lower. I have just checked it again. So it is lower. Okay, so you'll be taking this 8.75, whichever is lower. Okay, so you'll be taking this figure 8.75. Correct, Arun? You are 8.75. Lower it is lower. Okay, so now what is your T2 then? Your tier 2 becomes T2. 8.75 plus what is that? 100. So that is equal to 108.75. So what is your total capital now? Total capital is total equals to what was that? 690 plus 108.75. Right? 690 only, I think so it was. 690. T1 was 690, right? Yeah. Okay. 690. So it is, what is the answer? 690 plus 108.75. So what are you getting? 790 and 798. 798.75. Okay, so this is the answer. This is how you will be solving it. Okay? 798.75. Got it? This numerical, mind it, again I am telling you, whatever is surely to come, I always tell you it's surely to come. So this numerical is again sure to come. Compulsory. It may happen again, they will not ask you all these combined. They will ask you only provision for contingencies. They will ask you only this revaluation reserve. They may ask you 1 mark question also. Provision for contingency is 1.25% of RWA. Revaluation reserves, this 55% discount means 45%. Okay? So they may ask you this, or they may ask you only CET1 to find out. Only CET1 they will find out. Find the CET1. Or they may ask you find tier 2 capital, only tier 2. So part by part can also be asked. Full numerical can also be asked for 5 marks. So anything is possible and anything can be done. Okay? Got it everyone? Clear? Everyone like the video, subscribe to the channel, click on the bell icon. Have you subscribed everyone? All of you subscribe to the channel. Subscribe to the channel. Got it? A doubtful asset for less than 1 year account has a balance of 70 lakhs with a security of 50 lakhs. The account has a CGTMSE guarantee of 65%. What is the amount of provision? This you should be able to solve it. Let me see. How many of you are able to solve this? Okay, how many of you are able to solve this? Let me see. $1.75 lakhs. Okay. 1.75. What is loan amount? 70 lakhs, no? Okay. Chalo, let's solve this. Okay, let's solve it. Okay, see what is given? Doubtful for less than 1 year. So this is what D1. Doubtful one. What is the formula for doubtful one? Provisioning. It is, doubtful one is 2500, 15, 28, 2500. Okay. So 25 for secured and 100 for unsecured. Okay, this is a provision. This is a provision, right? So what is the loan amount given? 70 lakhs. Security is 50 lakhs. So secured loan is what? Secured. Secured equals to 50 lakhs. That is secured. Secured is 50 lakhs. Got it? Now if secured is 50 lakhs, what is the provision? 50 lakhs into 25%. So provision equals to 50 lakhs into 25%. So that is equal to 12.5. 12.25, 12.5, yeah, 12.5 lakhs. Okay. This is your provision for secured part. This is your provision for secured part. Now unsecured part. What is the unsecured loan? Unsecured. What is the unsecured loan? See, total loan is 70 lakhs. So 70 minus 50. So that is equal to 20 lakhs. 20 lakhs is unsecured. Okay. 20 lakhs is unsecured. But out of this also, you have a CGTMSE cover of 65%. Always remember, CGTMSE cover will always be for unsecured part. Always it will be for unsecured part. So 20 lakhs into, now see this, out of this unsecured, you have to find out more unsecured. So CGTMSE cover is what? CGTMSE cover equals to what? 20 lakhs into 0.65. Okay, 20 lakhs into 0.65. So what is the answer? 20 lakhs into 0.65. So 0.5 is 100. Yeah, 13. 13, na? 65 to 0. Right? What is the answer? 60, 120, 130. So 13 lakhs. 13 lakhs, correct? 13 lakhs. So this cover needs to be subtracted now. So my net unsecured part is what? Net unsecured part. Net unsecured equals to 20 lakhs minus 13 lakhs. That is equal to 7 lakhs. So this is my net unsecured part. For this net unsecured part, I will make a provision of 100%. So my provision over here will be provision 7 lakhs. So what is my total provisioning now? So total provisioning equals to secured plus unsecured. Total equals to 12.5 plus 7. So 12 plus 7 is 19, 19.5 lakh. This much will be my provisioning. 19.5 lakhs will be my provisioning. Okay, this much will be my provisioning. Getting this, everyone? Clear? So what will be the provisioning? One question on provisioning will also be there. Okay, one question on provisioning will always be there in exam. Got it? Clear? Okay? No need to provision. No. CGTMSC by provision. It is also secured, no? Yeah. See, CGTMSC means what? It's this, the fund is given by the government. It's an insurance. And it is always for unsecured part. Always. Secured part, you don't have any insurance. Okay? For secured, you sell your security and get your money. Simple rule. For unsecured part, you all this DICGC, CGTMSC, ECGC, every cover is for unsecured part. It is never for secured part. Okay? See, insurance is for what? You tell me simple logic. Insurance is where you have a risk. Suppose if I am having security, why do I take insurance? That security I can sell it and earn money, isn't it? Got it? Clear, everyone? Yeah. Asset in doubtful 2 category is what is the amount? 10 lakh. Okay. Asset in doubtful 2 category is 10 lakh. The realization value of the security is 6 lakh. So realization value is 6 lakh. Calculate the provision requirement. The correct answer is, now you have to write your own answer. So asset is in the doubtful 2 category. Kindly note D2. D2 category. Okay, asset is in the D2 category. Okay. $13 lakhs is what? That 65%. No provision for that. That is the insurance that is given by the government, Arun. That 65%, what is that? CGTMSC cover, right? So that will be given by the government itself. Okay. So what is the provision over here? Everyone, check this. What is the provision over here? Now we'll stop after this. This will be our last problem for today. Or should we continue for some time? Because students are getting bored, I think. So they have to go home. So, see D2 category. D2 means what? D2. That is equal to 40, 100. 40 for secured and unsecured is 100. Right? 100 for unsecured. That much is the provisioning. Okay? So what is given? Realization value is given as 6 lakh. Okay? So 10 lakh, 6 lakh. So secured is what? Secured equals to 6 lakhs. So provision is what? Provision is 6 lakhs into, what is that? 40%? D2 40%. 40%. Okay? So 6 for the 24. 2.4 lakhs. Okay? And unsecured part now. Unsecured is what? 10 minus 6, 4 lakhs. Provision is 100. So provision will be 4 lakhs. So what is my total provision? 4 plus 2.4, 6.4 lakhs. How many of you got this correct? 6.4 lakhs. How many of you got this? 6.4 lakhs, correct? Okay, we'll continue. Okay, for some time we'll continue. 15-20 minutes we'll continue and then we'll stop. Okay, because students are also getting bored now. They want to go have some lunch, dinner. An account became SMA2 on September 22, 2020. Its classification on 31/3/2023 will be. What will be its classification? This account has become SMA2 on September 22, 2020. On 31/3/2023, its classification will be. Think over it. Everyone think. Yes. What is the answer? SMA2 it has become. Who can answer me? See this? Who can answer this? Now what is SMA2? First let's check this. What is SMA2? Okay. SMA1 means what? SMA1. SMA0. SMA0 means what? 0 to 30. Right? SMA1 is what? 31 to 60. And SMA2 is what? 61 to 90. 90. So this account has become SMA2. Means where is it now? Where is that loan now? Has it completed 90 days or has it completed 61 days? Now you have to answer me this. Has this loan completed 90 days SMA2 or has this loan completed 60 days? The account has entered SMA2 category. So, has this loan completed 60 days or has this loan completed 90 days? On September 22. On September 22, where is this loan now? Is it in this 31 to 60 completed? So, understand this, okay? Whenever I say it has entered SMA2, it means it is over here. Here it is now, here it is, right now it is over here. So it has completed 60 days, okay, 60 days it has completed of non-repayment. Now, after 1 month, it will become NPA, okay. So this date is what now? September 22, okay. September 22 is this date. From here now, from September 22, what will happen next? Okay, what will happen next? After 30 days, this loan will become substandard. So what will be the date at that time? September 22. So September is what? 30 days, now 1 month. So let's take it round, okay? September 22, so October 22. October 22, it will become substandard. Okay. Now what do I want? 31/3/2023. So this will remain in substandard for 1 year. So it will remain up to what? October 21, 2023. Up to this date, it will be in substandard 1. Up to this date, it will be in substandard 1 category. Okay. Substandard 1. But what do I want? I want on March 31. So this will be over here somewhere. Right? 2023 only, na? Year? No. This is 20, my God. Okay, and this is 23. Okay. So, substandard, it will be October 21, 2023. From here, it will go now to doubtful one now. So, October 21, okay, 23. It will start now. Doubtful one category. So, it will be D1 for again 1 year. So, that will be, next is October 22, it will start, and again October 21, 2024, it will be in doubtful one category. October 21, no, am I going somewhere wrong? What was this year here? I am getting confused in the year, I think so, yeah. This is 22 October 20, I am getting confused in this date, 22 and 20, okay. So this 20 and then here 21. This date and this both are coming same. That's why. This again 21. Okay, 21. Okay, 21 October 2021. From here again it will go to 21 October 2022. It will be in doubtful one category. From here it will move to 2 years now. 2 years. So October 21, 2024. October 21, 2024. It will be in D2 category. But what do I want? I want in 31/3 to 2023. So it will be over here. So it will be in D2 category. D1, D2. Okay? It will be in D2 category. These days I got confused. Day and year. Okay? So it will be in D2 category. Got it? Clear everyone? So the loan will be in doubtful above 1 year up to 3 years. So it will be in C category. C. C will be the answer. Got it everyone? Clear? Chalo. We'll stop over here today. Okay? Tomorrow again we are having the same session. Tomorrow we are having final revision. Okay, tomorrow we'll be having final revision. So don't miss this final revision. Okay? Similar, I'll be taking many new numericals over here. And mind it, all of them, whatever is compulsory, I'll tell you in compulsory in exam. Okay? It's a good revision. Okay? Follow it. Got it everyone? Move on. Chalo. Bye everyone. All of you, have you seen this one point? All of you, have you seen it? See, one point many of you might not have noted. All of you should note this. Those who are watching on YouTube, on Adda 24/7 right now, the mock tests have become free. Mock tests are free now. Have you seen this? Go to JAIIB and CAIIB. Click on this CAIIB 26. Okay. Now check this mock test. See this BFM mock test now. These are free now. Do you know? These are free for next 2 days. Today, tomorrow, up to Sunday. It is free. So try this. Zero fees. Actually the fees is huge. 1799. Now you are getting it for free for 2 days. Just for exam sake, Adda has made it free. So everyone should try. Those who are not in the paid batches, you can also try the mock test. Those who are in the paid batches, obviously will try it, isn't it? So don't miss this. Got it? Tomorrow let's meet in the final revision. Bye. Same, 6 p.m. Srikant. It will be 6 p.m. only. Tomorrow again 6 p.m. Everyone kindly note tomorrow 6 p.m. Okay? Bye.